Over 35% of small businesses are organized as LLCs. Why do so many entrepreneurs choose this structure? This video dives into the world of limited liability corporations, uncovering the unique blend of flexibility and protection they offer business owners. An LLC combines the best elements of corporations, with their liability protection, and partnerships or sole proprietorships with their simplicity and tax advantages. Let's get started and explore how forming an LLC could be the smartest decision for your business venture. Don't forget to hit the like button, subscribe for more insightful content, and share your thoughts or questions in the comments below. What is an LLC? It's a type of business that protects its owners from losing their personal assets if the business owes money or faces legal problems. What are its key features? Safety for personal assets. Owners' personal things like houses, cars, retirement accounts, jewelry are safe if the business runs into issues with its creditors. The second advantage is flexible taxes. The business doesn't pay its own taxes. Instead, any money the business makes goes to the owners, and they pay taxes on their personal tax returns. This can save some money. Ease of filing. An LLC's taxes go on your personal individual tax return Form 1040. Single-member LLC do not file separately on separate tax forms. Easy to manage. It doesn't need a lot of paperwork or rules to follow compared to corporation and partnership tax returns. Example, imagine Sarah, who starts Sarah's Sweet Shop LLC to sell homemade cookies. She chooses an LLC because if her shop has financial troubles, her main home, car, and all other personal assets are safe. She finds the taxes easier because she just includes the shop's earnings when she does her own taxes. She likes that it's not complicated to set up and run. What are the advantages of forming an LLC? Number 1, feature is limited liability. Personal protection. Owners, members of an LLC are protected from being personally responsible for business debts or legal problems. This means if the business owes money or gets sued, the personal stuff like houses and savings of the owners are safe. Separate entity, the LLC is its own legal person. So if there are any business issues, they don't spill over to the owner's personal lives. Number 2, advantage is tax liability. Choose how you're taxed. One big perk of an LLC is you get to pick how the IRS taxes you. You can be taxed like a sole proprietorship if you're on your own, or a partnership if you have partners, where business profits are only taxed once on your personal tax return. Or you can choose to be taxed like a corporation if that saves you money. You get the best of both worlds. This flexibility lets you avoid the double taxation, being taxed once on earnings and again on dividends, that corporations often face. The next advantage is operational flexibility and simplicity. Easier to run. Compared to a corporation, an LLC is much simpler to set up and manage. There are fewer rules, less paperwork, and more freedom in how you run things. Making decisions. LLCs can make decisions quickly without the formal meetings and records corporations need. Example, take Green Thumb Garden Supplies, LLC, started by Jamie. Jamie chose an LLC because it kept personal savings safe when buying lots of inventory. With an LLC, Jamie also enjoyed tax choices, saving money during tax time. Plus, running the business was straightforward, without the complex rules of bigger companies. How do LLCs get taxed? LLCs are pass-through entities, which means the LLC never pays anything in taxes. What it means is that revenues that the LLC makes goes directly to the members' personal tax returns. The business itself doesn't pay taxes on its income. What are its benefits? Members only pay taxes once on their income from the LLC, avoiding the double taxation that corporations can face. However, LLCs get hit with self-employment taxes. About the tax. The revenue you make from the LLC is subject to self-employment tax, which covers Social Security and Medicare. Self-employment tax rate is 15.3% of your net earnings. Another advantage is that you can deduct business expenses with ease. Members can subtract the cost of things needed to run the business, like supplies and advertising, directly from the LLC's income. Health insurance perk. You can also deduct the cost of health insurance premiums, which lowers the amount of income you're taxed on. How to save on self-employment taxes. Standard LLC taxing. Normally, all LLC profits are hit with self-employment taxes, which covers things like Social Security and Medicare. So, what is the way to minimize self-employment taxes? Paying yourself a reasonable salary from the LLC's profits can lower self-employment taxes. The rest of the income can be taken as distributions, which aren't subject to this tax. Choosing S corporation status. If you tell the IRS you want your LLC to be taxed as an S corporation, you can pay yourself a reasonable salary that is subject to payroll taxes and not self-employment taxes. And the rate for payroll taxes is lower than self-employment taxes, which isn't subject to these taxes. This can significantly lower the amount of self-employment tax you have to pay, especially if your LLC makes a lot of money. How are LLCs taxes in different states? Tax benefits vary by state. LLC taxes are different everywhere. Each state has its own rules on how much tax LLCs need to pay. This means an LLC in one state might keep more of its money after taxes than an LLC in another state. State taxes. Some states have a tax just for LLCs, while others do not. The amount you pay can also be different from one state to another. Local laws matter. There are special rules when it comes to the local authorities and how they tax your LLC. Special rules. Besides the usual taxes, some states have extra rules that can affect your LLC. For example, they might require certain fees or have different ways of handling business losses. Why advice is key. Because each state has its own set of rules, it's really important to talk to someone who knows the local laws well. A local tax professional or lawyer can help make sure you get all the tax benefits your LLC can have in your state. Drawbacks and considerations. While forming an LLC, Limited Liability Company, comes with many advantages, there are also some potential drawbacks and considerations to keep in mind. Here's a simple breakdown. The biggest drawback is paying self-employment taxes, which are considered as extra costs. If you're part of an LLC, you might have to pay self-employment taxes on the profits. This includes Social Security and Medicare taxes, which can add up. Tax filing complexity. Depending on how your LLC is taxed, like if you choose the S corporation status, tax filing can get complicated. You might need to deal with more forms and rules, legal obligations and paperwork. Following rules. Following rules are important. Each state has its own laws for LLCs. You need to make sure you follow these to avoid problems. Paperwork. Paperwork adherence. Running an LLC means dealing with paperwork, like creating an operating agreement and filing annual reports in some states. Annual fees. Paying annual fees on time. Many states require LLCs to pay fees every year. The amount varies by state but can be a significant cost to consider. That wraps up our deep dive into the world of limited liability companies. We've covered the benefits, tax options, and some important considerations to keep in mind. Whether you're just starting out or looking to make the most of your existing business structure, we hope you found this guide helpful. If you liked this video, give us a thumbs up, hit that subscribe button for more insightful content, and don't forget to share it with your fellow entrepreneurs. Have any questions or experiences with LLCs you'd like to share? Drop a comment below. We'd love to hear from you. Thanks for watching.